If there's one trade to dedicate your life to, this is the trade. This is the big one. The biggest trade mankind has ever been given. Now, that sounds hubristic, but it's proven. No other asset has ever done 22.5 million% returns in 12 years. And they're doing that by 8% a year on a globalized basis. So it means that any asset that you have needs to go up by more than that, or your future self is poorer. Humorously, but it's true.
Yeah.
Right? The whole system is set for number go up. That's what debasement of currency does. When you buy an asset for investment, what you're doing is you're locking up money now to spend it later. Future deferred consumption. You need to be compensated for that, generally, because you're locking money up. So that's why long-term bond yields have a higher yield than short-term, generally. And so that asset needs to be worth more than current money today. Now, we all know about the inflation. Call it 2% a year, whatever the number is. We kind of all understand that bit. But after 2008, they started using liquidity, so creating more money.
Guys, Bitcoin and crypto prices are about to go parabolic. Things are really about to get wild. In this video, Raoul Pal, the well-known financial analyst, macroeconomic expert, CEO of Real Vision, and influential voice in finance and cryptocurrency, analyzes it all. Raoul discusses the future of crypto and provides his latest outlook on Bitcoin and crypto as the market enters what he calls the banana zone. He breaks down the concepts of debasement and liquidity, explaining how the influx of funds into the system, especially with the upcoming US election, is driving up asset prices. Don't miss his insightful analysis. As we bring you clips from the video, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
To allow the governments to be able to pay the interest on the excess debts. And that is debasement. And we've seen it with air miles. So if you tell your mother, she's like, I don't understand what you're talking about. Say, do you remember when you first got your air miles on Swiss Air? And, you know, if you flew to London a few times, before you know it, you could get a flight down to Marseille. Yes. And now you fly to London for a few times. What does it get you? I don't know, a pair of plastic sunglasses on their website. That's debasement. That's when you excessively issue points, rewards, money, that the value goes down. And they're doing that by 8% a year on a globalized basis. So it means that any asset that you have needs to go up by more than that, or your future self is poorer. That young people were totally fucked. And that they were never going to get up the ladder. And they needed a gift. And back then, this was 2016, I said, crypto is that gift. This is the only way I can see to get out. And that has continued to play out to this day. And now those same people who were 30 then are now 35 and they're having kids. So they're moving out of cities, buying houses in the country because it's cheaper. They're not going to work in the office because it's cheaper. They have to bring up their kids and they can't afford a nanny. And they still can't get ahead. They've got school fees and retirement and their house. Are they renting a house? Do they own a house? Chances are they don't own one yet. And they know they're fucked. Everybody knows they're fucked. And they don't know how to get out of it. And that whole idea, once you understand that people know they're fucked, it explains a lot of how the world works. It explains why we get the left and right polarity. I've got to blame somebody for why I'm fucked. Then it's also the rise of the speculative economy. Why? Because I'm never going to get ahead. I have to take risk. That explains GameStop. It all came from Occupy Wall Street. It all came from the same thing. It's all the same movement of these people realizing that their future has been robbed because the baby boomers took too much debts on. Then they're having to learn how to speculate. They all became financialized. 2020 was like, that whole generation didn't care about real vision. There were some people who studied the masters of finance and stuff. Yeah, sure, they cared. They didn't care about markets. They didn't care about anything. They just didn't give a shit. They cared about Instagram.
Before 2020, banks were the central pillars of the financial system, handling everything from savings and loans to investment services. Central banks controlled monetary policy using tools like interest rates and quantitative easing to influence economic activity. For example, the Federal Reserve in the United States would adjust interest rates to manage inflation and stimulate or cool down the economy. In 2008, during the financial crisis, the Fed reduced interest rates to near zero levels and initiated quantitative easing to inject liquidity into the market. The stock markets were the primary venues for investment, where investors bought and sold shares of publicly traded companies. Bonds, mutual funds, and real estate were also popular investment vehicles. The New York Stock Exchange, NYSE, and NASDAQ were the epicenters of stock trading. Investment strategies often revolved around buying undervalued stocks, holding them for the long term, and relying on dividends and capital appreciation for returns. In 2020, the financial world faced unprecedented challenges and changes due to the global COVID-19 pandemic. The crisis accelerated the adoption of digital technologies, cryptocurrencies, and decentralized finance, DeFi, marking a significant shift from pre-2020 norms. The pandemic induced digital transformation. With lockdowns and social distancing measures, digital payment systems and online banking saw a massive surge. Businesses and consumers increasingly relied on digital transactions, hastening the decline of physical currency. Bitcoin and other cryptocurrencies experienced dramatic increases in value and mainstream acceptance. Institutions began to invest in cryptocurrencies, recognizing them as valuable assets and hedges against inflation. Let's get back to the video.
2020 came, and suddenly they were given money, and they were at home, and they were given a game to play, and they saw the future. And that was the largest, fastest financialization of people, I think, in all history. It was astonishing. Humorously, but it's true.
Yeah.
Right? The whole system is set for number go up. That's what debasement of currency does. When you have an over-indebted system, the collateral of the system, the assets, can't go down, because if not, you've got too much debt versus the assets, and that's what happened in 2008. So the whole system is based on that. The baby boomers are all going into retirement. You can't let their assets go down, because if not, they've got all the wealth. So therefore, consumption will collapse. The number can't go down. So as opposed to number go up, you could say the number can't go down. So the liquidity cycle is just an element of that. It's the actual mechanism by which it happens. If you're 30, you shouldn't give a shit about that cycle. You should just use any weakness to keep buying more number go up assets. For others, it then becomes a cycle to try to take some risk off the table, because it's a volatile space, particularly in crypto or technology investing. Both work well. But then you come to the question is, and most people get to this, is everyone thinks, yeah, I'm going to take money off. And then you're like, and where am I going to put it? Because as soon as I take it off, debasement's happening again. So you might put it in stable coins for a bit. Sure, definitely cash in lifestyle chips, buy that house, do that thing that you want. But after that, it's difficult to think about getting out. The reason Jeff Bezos is the richest man in the world is because he didn't sell his Amazon equity. Right? People forget that compounding returns. Bitcoin since 2012 is up 22 million %. It's 140% a year. In that is 4 down 85% bear markets. And it's still that. Solana was down 97.5% last cycle, or 98.5%, sorry. It is still compounding at 240% returns a year. Everything is easier when you're riding a secular trend. Why was my career successful? I rode two trends. One was the rise of the derivative market, gigantic. It's a $1.4 quadrillion market now. That was one. The other was the rise of hedge funds. So at the biggest customer base and the biggest product, you can't help but make money. That's a secular trend. You want to be in places with a secular, you want to live in a country where the economy is growing on a secular basis. It's like one of the reasons why Spain is difficult to live in. Most of Europe is like a museum now. It's beautiful, but it's not a place to be an entrepreneur because the economy is not growing. Same with Japan. And China's gone kind of ex-growth. India's the fastest growing economy, the Middle East. But there's two trends that are easily investable that are in a secular trend. Every day, and it's all the same trend, every day is more digital than the previous day. It's as simple as that. And therefore, this whole trend of digitalization of everything, including human intellect, including human labor, that's robots and AI, including money, everything, is going to outperform. So just ride that trend and don't overthink it. I see so many people wanting to trade commodities here and this cycle there, and I'm like, you're wasting your time. You don't need to do all of that stuff. I've been guilty of all of that stuff, but I've realized that you don't need to do any of it. I see everybody go down this journey, and it's really funny to watch. Often, people go into the space, fuck it up, go, whoa, this is too crazy for me. They then absorb a bit, they come with a bit of humility, they come back to the space, and slowly it becomes everything. I've seen all my macro friends do this. I've watched them all. My peer group, the people I grew up with in the industry, one by one, just go to the black hole and jump into the abyss and never come back. People like Alan Howard, legend of our space. We launched hedge funds at the same time. Alan was always a better trader than me and was famous as one of the greatest traders around. I mean, he's all crypto. Dan Tapiero, Dan Moorhead. Just one after the other, they get there and they never come back because the returns on a risk-adjusted basis are so ridiculous that they realize this is if there's one trade to dedicate your life to, this is the trade. This is the big one. The biggest trade mankind has ever been given. Now, that sounds hubristic, but it's proven. No other asset has ever done 22.5 million % returns in 12 years. And we get given this bet every cycle.
Absolutely.
You get a 10 to 50x every cycle from buying one of the biggest coins.
Yeah.
The hard thing is people get stuck in a narrative. There are people stuck in, and I'm going to get hated for this, but people are stuck in Cardano, people are stuck in XRP, they're stuck in stuff from the past. Doesn't mean they're bad projects, but if your game is to make the most money, then you have to drop all of your allegiances from the previous cycle, all of the things that you had taught yourself to believe, like ETH is the only thing. That was what you had to believe last cycle, and now you have to believe that Solana is the fastest, cheapest, best, and that narrative will get shattered next cycle. And you have to accept that.
The last real meme that I'd like to talk about is, we have it on this table.
It's the banana.
It's the banana, exactly.
We're about here. This is the point. We're about here. Pre-election cycle years, liquidity, everything means that generally things should go bananas in Q4. So we wrote an article and we said, we called it the banana zone because things go bananas. Cut to, I don't know, by about March, April, maybe March, we had started applying it to say, okay, we've got that was the banana zone for that quarter, but we've got the actual banana zone, which is when liquidity drives everything crazy. And then you start seeing those wonderful charts of Bitcoin. Each cycle, they kind of do this, and then they do this. Yeah. It happens to be that. And it's when things go bananas and people fuck this up because they lose their minds. They FOMO into everything. It's when no laws apply anymore. The law of the banana rules all. And it always happens after the halving, which is kind of here. There's a bit of chopping around. And then as we start heading into the US election, between June and August, prices start going vertical. Doesn't mean we don't get these sharp corrections in the middle, but things go vertical and we will lose our minds. If we are having this conversation in 9 months' time, we'll be fighting with ourselves to try and maintain the discipline that we've been trying to teach ourselves because the banana zone will be happening.
There you have it. Raoul Pal's insightful analysis of the global market and its trajectory. Raoul discusses the alarming rate of currency debasement and its long-term impact on purchasing power, particularly for young people. He emphasizes the importance of seizing opportunities in cryptocurrency to improve their financial standing. What are your thoughts on Raoul's outlook for Bitcoin and crypto? Do you foresee a possible banana movement in the market in the coming months? And I hope you got some value from this video. Please share your comments and observations in the comment section below, subscribe to our channel, and give this video a thumbs up. Thanks for watching.